Hey everyone, welcome back to Corporate Decoder. Today, TRILLER Group Inc. just filed a notice regarding a Nasdaq exception, and I am seeing a critical sign that could save them. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company has been hanging by a thread with Nasdaq, and this filing shows a temporary fix that gives them a shot at survival. So, what is this filing all about for TRILLER Group Incorporated? It is essentially a notice of receipt of exception to regain compliance with Nasdaq bid price rule. In simpler terms, Nasdaq, the stock exchange where TRILLER's shares trade, has given them a bit more time to get their stock price up. This is a big deal because if a stock's price stays too low for too long, Nasdaq can delist it. Delisting means the stock can no longer be traded on a major exchange like Nasdaq, which usually causes its price to plummet even further and makes it very difficult for investors to sell their shares. Think of it like a company losing its membership in a very exclusive club. TRILLER has been in this struggle for a while. They had a previous issue with properly filing their reports on time. They appealed that, and thankfully their stock started trading again in April 2026 after they finally submitted their annual report for the year ending the 31st of December 2025. That's like fixing one leaky pipe. But then another problem popped up. Right after they got the filing issue sorted, the Nasdaq staff pointed out another problem. The bid price rule. This rule basically says a stock needs to trade at $1 or more for a certain period. For TRILLER, their stock price has been way below that. The Nasdaq staff tried to get the listing council to deal with this, but the council said it was up to a different group, the hearings panel, to decide. So, TRILLER went to the hearings panel and asked for an exception. They needed more time to try and get that stock price back up to the required dollar mark. And here is the good news, the panel agreed. They've given TRILLER an exception until the 30th of June 2026. This means TRILLER needs to get its stock price to at least $1 and keep it there for 10 straight trading days before that deadline. If they miss this deadline, they could face delisting. Now, let's look at the context of their stock. The current price is about 5 cents. And it has been trading in that very low range for the past year. This means they have a very long way to go to reach that $1 target. To go from 5 cents to $1, the stock would need to increase by 1,900%. That is a massive jump. Let's quickly check what they are trading. They have common stock trading under the ticker symbol ILLR on the Nasdaq capital market. They also have warrants which represent the right to buy shares, trading as ILLRW. The common stock is the 0.001 par value common stock, and the warrants are each exercisable for a quarter of a share at $23 per FUL share. This high exercise price on the warrants is quite steep, especially considering the current low stock price. This whole situation with Nasdaq's listing rules is a common challenge for smaller companies, especially those that have gone through significant financial difficulties. We saw a similar situation with Bed Bath & Beyond, which eventually struggled to regain its footing after facing delisting threats. While TRILLER has gotten a reprieve, the path to consistent compliance is tough. Many companies that go through this reverse split process, around half of them end up delisted eventually. For TRILLER, getting from 5 cents to $1 in just over a month is an uphill battle. The filing also lists exhibits including a press release and the interactive data file. These would contain more detailed information, but the core news is this Nasdaq exception. Looking at the broader picture, TRILLER Group Incorporated has 144 employees. Institutional ownership is quite low, with Rivernorth Capital Management holding a little over 0.5%. This suggests that large institutions are not heavily invested, likely due to the volatility and risks associated with the company's stock. The challenge for TRILLER is to not only meet the minimum bid price requirement, but also to do so with sustainable business operations. Simply boosting the stock price artificially without underlying business improvement is a temporary solution. We need to see if they can demonstrate consistent revenue growth, profitability, or a clear path to it. The fact that they are fighting for listing compliance all while trying to grow their business is a lot to juggle. My biggest concern is the extremely low current stock price and the very tight deadline. Achieving a 1,900% increase in just over a month requires significant positive catalysts that are not apparent from this filing alone. The company needs a substantial event or a series of very positive announcements to move the needle that much. What I am actually looking for is a clear strategy and execution plan that can not only meet the Nasdaq bid price rule, but also create long-term shareholder value. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.